Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for a wild week, but it's Thursday of the week. It's the 17th of March, and we are sitting here at March 22nd, 2022, about 5:38 p.m. Central Time, and what's begun? You know what's begun. March Madness. So the gambling has begun. It'll be game after game. Men won't see their wives, and wives that are basketball freaks won't want to see their husbands unless they're into that game. It is one wild time. It'll cost American business billions of dollars. The difference this time is we only maybe have a third to 50% of the workforce going back to offices still. It'll pick up during the summer, I'm certain. So you don't get to see as much of what people are doing. I remember in my office, I'd walk by a screen thinking, oh boy, look at my brokers. They look so intent. Yeah, they're intent. They're watching Gonzaga. They're watching all these other games. All right. I want to tell you something that is going on in the industry that I think is important. Risk controls. Clearing firms are concerned about the amount of risk these markets are posing. And that's because they're moving in a way that I explained to you when the Ukrainian war, the Russian war, whatever you want to call it, began. I said these markets will become day traders' delights, not position trader delights. I think I was right on the money. I think trying to catch a trend in these markets is difficult. I'm watching the successful traders day to day in my firm. And what are they doing? Most of them that are making the money, they're in and out, and they're not carrying a lot of positions home overnight, and they're starting again each day. Do I typically advocate that? No. What I do understand is the broad ranges are so big that they're able to capitalize on that. Okay, game shift for periods of time and just recognize that that's it. Now, this rally in stock market, I appreciate that it's taken place, but I don't think it makes a lot of sense, and I don't think it's going to hold up as long as people think. I think that what you did is you had a market that broke too hard, got what the Fed said, understands that, hey, the event's over. Every live meeting with the Fed, we're going to get a rate hike until we don't. Do I think, and I've said this to you, we're going to go with all the hikes they have on paper? No. And that's because I think the market will come back down in a number of areas and help them with the inflation story. Number two, I think the raising of interest rates will cause a problem for employment. Eventually, employers will say, well, everything I'm looking around, it's inflation. I got to run my business. I'm forever borrowing, and that's how you do it. You're getting bank leverage or money to work it. You're paying them back. That's going to cost you more. The owners are going to get squeezed on this. The Fed knows it. The Fed said, the economy's strong enough to handle it. And right now, the data is that way. But remember, we only did the first hike yesterday for the first time in almost 4 years. That rooster is yet to go home. He will. And that's when the problems are going to develop. So when I look at the weekly area chart of the market, we're up 5%. I love that, don't get me wrong, but it's the first meaningful bounce since we peaked out all the way here. Do you disagree with that? If you don't, it's the first bigger bounce. These didn't match it. Okay, the week's not over. Let's see if it can hang in there. When I look at the chart here, this is now a market that's in a churn. You don't follow through to the downs or the ups. That seems to be what's going on. And the market changed its pattern right here. And I know I mentioned this to you over and over. You had the lower highs, the lower lows, and then all of a sudden you had a higher low come in with that one. And that began the pattern of giving you this choppiness in the market. And it has stayed in that way now for quite a while. That makes trading it very, very difficult. Where's the big resistance? I think it's the 200-day average. Once the market got under that, it hasn't really gotten back over it since back here, middle of February. Can it do it? Of course it can, but that's still a resistance point. And guess what it matches up with? Your Bollinger Band. Now remember what a Bollinger Band is. The black lines do not run parallel to the red, first thing. They are an algorithm designed to keep the market trading within them 95% of the time. Therefore, the logical way to approach them is when you hit them, why do you want to be in for the rest of the ride when there's only 5% of the time you stay out of that band? And I'm not giving you the course. The course about this, just go to our website. It's all there for you to view. It's under education at www.iraepstein.com. Go look at it. I think you'll learn a lot. So I'm looking for the resistance up here. I'm not in the bull camp that so many other traders are. You've had a vertical price rise that I think is overbought into a big resistance area. So between 442.80, the 75, we'll call it, the upper Bollinger Band, and 446, the 200-day average, I think the pros will be out of the market. In the NASDAQ, it's the same pattern. You went to the Bollinger Band, you bounced up, okay, but that's not a trend. A trend has higher lows and higher highs. You don't have that in this market. You don't have it in the Russell. The Russell has come back, and now I think it'll fail at the 18-day average of closes. I have told my subscribers on my morning videos not to be short under any circumstance the Russell. It seems to be the one index that wants to come alive in this type of market. That doesn't mean I've told them to buy. But I recognized early on how important these Bollinger Bands were, and I said, there's something not right. It just doesn't want to follow through. Now, in the VIX, I think today the pros wrote puts in this market, looking for in the next days to get back to 30.74 and capture that premium. Which ones they wrote, so on, that's not my job to tell you, not in this video. But that's what I think they're doing. I think we have triple witching tomorrow, so you got to be a little bit careful of that as well. In the June T-bond, okay, are we going to lock in and embed? That's what I'm looking at. The trend is down. Rallies, I don't think they're going very far. The Fed has told you their game plan. So if people want to bet that, oh, the market's going to go and the Fed's going to change their opinion, it is not going to happen. It's too early into this. So view the rallies, especially when you have an embedded reading, that you want to get short on those rallies, looking for the market to keep challenging the Bollinger Bands. What else is there in the marketplace that we know of at least that could set the market up? Not an awful lot. It would probably take drawing NATO, a member or members, into the fight with Russia. Barring that, what's going to make the bond market want to take off? What's the next big event? I don't see one. That's the problem. When I look at the dollar index, you have a lower low, but now I can take this arrow and move it here. If you look at this low, it was 97.79.5. You just hit 97.71, so I don't have it in the right place. You also lost your embedded reading, which meant you were going back. I'll carry this for you. You were losing it right there, probably going back if you don't get it back right away this morning, Thursday morning, to the 18-day average. Take my enhanced Bollinger Band course, you'll understand what I'm saying, and that's what took place. Now in the eurocurrency, a little bit different game. It appears that the market wants to bet against the dollar, and I know this is not a popular theme you're hearing on TV, but it's what the market's doing. The dollar's falling because the marketplace is wondering if the Fed can get it right. How are they going to keep raising interest rates and let the American economy grow? Whereas in the euro, they don't want to raise rates. You know, Ms. Lagarde is fighting it tooth and nail. It's getting a bid, not because they're so much better, but because they don't have their governments trying to tamper the economy down. In the British pound, I was playing wrong. No other part to it. You had a downtrend, got embedded, and I told my traders I thought they could sell this rally right there. The risk was not big. It didn't work out. It's okay. Not all trades can work out. You lose 60 points, 100 points, 80 points. That's normal in the market. So where do I think the market is going since it lost its embedded reading? I think it's going to hit the 18-day average of closes, and it's got to rebuild. We saw the rate go up a quarter point. It was widely expected. They raised the interest rate on the Fed part yesterday, right? If you didn't see the dollar go up, the dollar's been going down. Okay, in Bitcoin, Bitcoin's in no man's land. It just keeps hanging in here, and this is the June contract, admittedly, but it's just going sideways. So is momentum with the market. Don't see anything there. Now, the differential between Brent and May crude. So far, Russia has not cut off any form of the oil or the natural gas. They met a payment. They had a $117 million credit payment due yesterday. They made it. The news had it wrong. The news was reporting that they thought it was paid in rubles. I was reporting it because that was in the major news items, okay? As it turns out, JP Morgan today said, no, no, no. The money was paid in US dollars. That means they're not in default on that $117 million, which could have been, over a 30-day period, begun a whole trigger of problems for Russia. They avoided that issue. We then get to where the energy markets are back to. What's the neutral number on the chart? This was a vertical price break that wore the market out, no question. Now, you've already discounted the war. Do you really think you're going back up to those highs? I have my doubts. That doesn't mean that the war can't get worse and Russia does something stupid, but the market's built that in, and it's already seeing that, hey, if I can't get the oil from point A, I can get it from point B. If Russia doesn't sell it to this group, then they're going to sell it to that group. And the market's realizing that the fluidity of where you can move the oil is what's going on in these parts. It also means without Biden, our president, giving the go-ahead to the Keystone or to reasons for the Permian and other parts of America to drill even more oil, we're not going to get enough. I mean, we had a number of wells for a decade being drilled, as you know, for the fracking experience. But new ones being drilled on a regular basis, I've got my doubts about it because the oil companies want to know the longer-term strategy. The world seems to be against their oil. Why are they going to invest in it? They're investing in other things at this point called their investors. They're giving them back huge dividends. On the WTI part in the U.S., you've gotten back just like the Brent, hanging there doing nothing. Heating oil, no trend. You ended this decline, but you're not trending. That ended when you took out this high today. Game over. That simple. And where did it end? Right against the 18-day average of closes. And in nat gas, yes. I've been telling my traders, I drew in the morning subscriber video, a downtrend line and an uptrend line showing them how the market had done one of these. Move in. And I said, if it breaks out, probably going to run to the 18-day average of closes. Isn't that great? You should be out of that market if you're long. And I'm laughing because it was a trade that worked. Okay, the risk was not my type of risk. You had to be a buyer, the way I was teaching the trade. Over 470 with stops under 450, 80. I don't have that ability to risk that kind of money for my traders. I pride myself that risk should be in the neighborhood on a normal trade of $600. Embedded could be a lot bigger, but you got to learn about that. So how do you learn about what I do? And it's pretty simple. I want to be your guy in the morning. When you wake up and you go, oh, what's the charts doing? Charts. You can watch, and I hope you do, Fox. I like BNN, I like Bloomberg, I like CNBC. Watch those to get a feel for what people are saying, but you're not going to see all the charts. That's not what they do. They talk the generalities or the few earnings on CNBC that are coming out that day. As you know, Bloomberg, they center on what? The big indices. Tom Keene is the best I've seen in the game. They got a team in the morning that's just so much fun to watch, and they're good at it. I'm different. I'm going to give you a team of me on 40 charts. I'll rotate them. You can write me questions. I bring them in, and I give you something to look at each and every morning. Want to find out more? Just go to our website, go up to the word research. It's all explained there. I'm Ira. You have a good day.